All right, guys, big day in the market. At one point, the Nasdaq was down almost 5% today. It finished down exactly 4% in the nose. I just came in from out of town. I was on a plane as stocks were falling, as the market was closing, we landed. So I'm here at home just trying to get a video out to let you guys know that, of course, what we believe is that stocks are overvalued. If you're new to the channel, we look at a lot of metrics, and literally 7 or 8 metrics going back to 1950 are all in the 95th or worst percentile, except for one that's in the 90th percentile. The stock market GDP ratio is 100% overvalued. The 10-year PE ratio is 111% overvalued. Has there been a big pullback this year? Absolutely. Is it better? Absolutely. But just because something becomes cheaper does not make it cheap. We are trying to teach this approach of principle-driven investing. When you look at investments, when you look at stocks especially, in the short run, they're voting machines. In the long run, they're a weighing machine. The Nasdaq is in correction territory from an all-time high just a few weeks ago. Bitcoin had an all-time high of 109,000. It's now below 80,000. It is down 30% versus the Nasdaq not being down 30%, a little over 10%, I think. I don't know the exact number. And of course, the Magnificent Seven are the strongest stocks in the Nasdaq and the S&P, and they are down over 15% year to date. It's pretty crazy. I made a video out there, and I made my own Magnificent Seven to start the year, and we made a video that we're going to start showing this Magnificent Seven versus the real one. And to start, the real Magnificent Seven was outperforming, but now it's kind of turned. Again, it's too short run, though. I would never look at the short run. Now, today on Twitter, I criticized Bitcoin being a poor store of value. The fact that it's down 30% in such a short period of time, in just a matter of how many weeks. And of course, people jumped on me. Paul, it's too short term. You say you claim you're being short. You look at long term. You don't care about short term price movements. Guys, my tweet was only about a poor store of value. Do you want the things that you store value in to fluctuate 30, 40% in a matter of weeks? If that's for you, then by all means, Bitcoin is for you. When people say it's a hedge, what's it a hedge for? Against markets? Guys, this is not a hedge. When the Nasdaq is down 11, 12% and crypto is down and Bitcoin's down 30% or more and Ethereum's down 45%, how is that a hedge? That makes zero sense to me. Now, our principle-driven approach to investing, one of the core tenets, apart from in the short run, stocks are a voting machine, in the long run, they're a weighing machine, is that when you buy a stock, you're buying a piece of a business. And we're not going to look at the short run to decide if we're right or wrong. My Magnificent Seven is doing quite well, but it's still too short run. We're talking about 9, 10 weeks into the year. It's not enough to actually sit there and declare a victory. What it is enough is to look at it and say, why are these stocks down more? Well, we've said in past videos over and over that the most overhyped stocks that drive the markets up, when the markets go back down, those will drive the biggest losses. Nvidia is there. Nvidia is down, 35, 40% this year from an all-time high of 150 plus. So I think it got as low as 104, 105 today. I don't know the exact numbers because, again, I was on a flight. I mean, that's a lot. Tesla, guys. Tesla hit a low today. Let's see the exact low. I'm going to look this up real quick. But its all-time high was as high as 480 or so. But Tesla today finished at 222, basically at its low for the day. All 52-week range, all-time high 488. And guys, when was that? That all-time high was back in the middle of December 17th. Less than 3 months ago, it has fallen over 50%. That's incredible. That's absolutely freaking incredible. Unbelievable. Now, is it because of Elon Musk? Yeah, people say, well, it's because Elon Musk is doing all these things with the government. Yeah, but guess what, guys? That's why we always tell people you need a margin of safety, because you never know when your CEO is going to go rogue. You never know when your CEO is going to have a fit of rage and do something difficult or different. And if you're ever investing in a company, remember, just 2 or 3, 4 years ago, everybody said Elon Musk's a genius. Those same people now, I'm hearing friends tell me that when they drive their Tesla, a friend of mine in Atlanta just told me he drives his Tesla around, people look at him and yell F you to him because he has a Tesla. He's like, I don't even care about Elon Musk. Isn't that incredible? That small thing causes the stock to fall that much. Is that reasonable? Are markets efficient? Of course not. On the Magnificent Seven this year so far, one stock is up. Meta Platforms is up 2.13%. Google's down 12, Amazon down 11, Apple's down 9%, Microsoft almost 10%, Nvidia and Tesla down 20 and 45% year to date, respectively. Makes sense. The most overhyped ones are the ones that are dragging down the most. That's what's amazing to me. Guys, what's going to happen? We don't know. But I do truly believe that we're set in a very, very overvalued market. And that means, like Howard Marks has said recently, you've got to be ready for a lot worse returns over the next 5 or 10 years than we got in the last 5 or 10 years. That seems unlikely to a lot of people who are new to the markets. But you've got it. This is 170 years of stock market, 150 years of stock market history won't be wrong. Are things going to change the dynamics of the market? Yeah, sure, of course they are. I mean, look at this. The only time valuations were ever this high was one time before in 2000. In the late 60s, Warren Buffett closed his partnership because of bad potential buys out there. And the market, according to his indicator, was about 35% overvalued. We're 100% overvalued today. And he sold his partnership out saying, you're just gonna have bad returns for a while. Isn't that incredible? Now, there's a lot of arguments that valuations should be higher. And I get that. I believe it's because of our businesses are more service oriented with higher returns on capitals. They deserve a premium. How much of a premium? That's the question. Because number 4 pillar of our 5 pillars of principle driven investing is a great idea can become a bad investment if you pay the wrong price. If that makes sense to you. This is the channel to pay attention to. A lot of earnings happening this week, a lot of economic indicators coming out. People blame today's market fall on the fact that Trump would not rule out a recession. Guys, that's not Trump's job. No president's job is to rule out a recession or try to avoid one. Their job is to manage the country. Recessions are a necessity. Recessions will happen. Recessions weed out crappy companies. They weed out crappy employees. They weed out dumb people. You are not dumb. You are not crappy because you are sitting here watching this video. So this excludes you. But the point is, any good investor should want bad markets, should want the markets to be down. You want to get rid of all the easy money out there. And crypto is the easy money. I still believe that crypto in its form today will not last, will not work. Are there other ways it can happen? Okay, maybe. But the US agreed to do a crypto reserve, and now look what's happened since then. What was that date? Crypto's down significantly since then. Bitcoin's down significantly. Could it be too short term? Absolutely. Absolutely. But we'll see. But the things that they're saying of what crypto should do and what should happen because of it don't happen. It's just euphoria driving up and insane people just driving up numbers on crypto and Bitcoin and all these other things. Guys, it is not an asset. It is not an investment asset. It's a speculative machine. That's it. Anybody who says otherwise does not understand investing. So guys, 2 things I want you to do for me. 1, if you're on Twitter, follow me at EMPaulG. If you want to see my posts, I'm very active on there. I love doing polls. And 2, if you want to be around like-minded people, if you want to be able to have the tools to make better decisions, we have our software, we have our community. If you haven't seen them yet, trust me, you will, especially on our main channel, everythingmoney.com/sign up. Go take a look, but I want to warn one thing. Do not sign up unless you're a serious investor. We don't want hacks. We want people who are long-term, serious investors. That is what the software is made for. It is not people who are speculators waiting for others to tell them what to buy. This is a place for people to have conversations. I will see you there. Thank you for your time.